Hey everyone, it's Matt with EquiPredict Analytics. Thanks so much for watching. In this video, we had a reader reach out to us asking for an updated forecast for the natural gas futures contracts. We're going to go ahead and walk through that, the prior forecast as well as an updated forecast, and we're going to see kind of where things are likely headed for the contracts for natural gas. And again, if you're enjoying some of the content here, please do feel free to subscribe to the channel. You can also head over to the website equipredict.com. We have a whole lot of information over there regarding market forecasting, and if you'd like, we do have a free newsletter that's sent out once a quarter. That's an EquiPredict forecast that we send out so you can kind of see how the model works over time. So again, it's equipredict.com. Up on the screen here, this is a weekly chart of the natural gas contracts, end of day contracts for natural gas. And one thing to note, just for those who are newer to the channel, the blue line is actually the EquiPredict model. What it does is it's not a technical analysis model. It doesn't, it's not giving you, again, technical analysis, just to kind of summarize and not get too off track is, for example, I go ahead and draw a line here and I say this is resistance, and then I go ahead and draw a line down the bottom here, and that's support, and then price bounces in between two, and we want to find out where those support and resistance lines are. That's technical analysis in a nutshell. But the EquiPredict model is a forecasting model, so it lets us know, it gives us a roadmap into the future as to where we should expect bullishness to set in, bearishness to set in, or sideways price action. For example, right now, this is the old forecast, which was actually completed in November of 2023. And then let us know that this particular moment in time we should be looking for bullish price action, and this goes into about March or April of 2025, and we should be looking for to sort of peak out, for example. That's how the EquiPredict model works. One thing to note is that this blue line forecast, as I mentioned, was actually created down here. I just noted this was actually just as the last week in November of 2023, and it did a pretty good job tracking the price action in natural gas contracts up until about July, and then it started to invert. That will happen with cycles where you'll get an inversion. But what we want to see is typically the EquiPredict model eventually gets in lockstep with that within one or two cycles after that, back into lockstep with the actual price action. That appears to be what is likely happening now. And I'll show you guys actually the updated forecast with this next screen here. Let me just turn off this cursor. So this is the updated forecast, the red line. So this red line is actually using the data that's this week. So that red line, what you'll notice is that it hugs more tightly the actual price action. You're going to see that it let us know that we should be looking for bullish price action sort of in December. It was a little on the late side when it came down to the drawdown as we got into 2024. And then it let us know bullish price action set in here, bearish price action is set up here. So that's exactly how the model is designed to work. It lets us know in advance where we should look for the behavior of the particular underlying equity and security to change its character. And so the updated forecast, and I'll turn the old one back on, that went from November 2023. And what you're going to notice is that this is what we really like to see. We like to see when both models agree. So you have an updated forecast that agrees that bullishness should set in right about here, and you have the old forecast which also is letting us know that bullishness sets in here as well. And this is going to bring us, if you actually look into the red, if you're going to use the red forecast, which is the updated model, which is likely more accurate because it's closer to the data that it's using, that brings us into the first week of December when we should start to see some pressure. One thing to note, however, is that it doesn't mean there's going to be a sell-off. It doesn't mean the price is going to follow this forecasting line. It just means that really there's a high probability there's one of two scenarios that will play out. We're going to see some bearish pressure, okay, going into around February of 2025, or some sideways pressure, sideways price action until then as well, until we see some bullish price action set in actually on about February 10th or so. So that's what the models are telling us. What you should also kind of note from this is also that the two models again come into this sort of area of agreement up here in about March or April of 2025, letting us know this is a high risk area to start going long the contracts, that the natural gas futures are likely to see some selling pressure to the downside. Part of it is just the cyclical, the annual kind of cycle in natural gas. And there are others that are factors that the algorithms are taking into consideration when creating these forecasts. So in a summary, for those who are just kind of fast forwarding here, you're going to be looking for bullish price action to set in right around this particular period of time. Into December, some potential pressure going into January and February of 2025, and then a nice uplift from February into likely last week of March, early April of 2025 is when you might want to look for another time to go short or sell your positions. So I hope that helps. Hope that provides you some guidance in trading your natural gas futures contracts. Good luck and have a great weekend.